Yay. Good morning, good morning, morning, everybody. It's Monday, December 30th. This is the last Zoom of the year that we'll be doing of 2024. So I'm happy that you're here with me and hopefully we'll give you some value. I'm going to start off doing the year in review and then show you a few setups on gold and Bitcoin. And then we're going to pass it over to my colleague and mentor, Jim Aguilera, who's going to do some live analysis on the indices and whatever else he feels like doing this morning. So let me share my screen. We'll jump straight into this. Everybody see that okay? Give me a thumbs up. Good, good. All right. So year in review, what happened? And what we saw last year. So here's a disclaimer, as always. You can read through that in full, but basically it's saying we're not financial advisors. We're not giving you financial advice at all. Consult your licensed professionals if you want that kind of advice. This trading does involve risk, whether you're trading indices, crypto, commodities, etc. And it does involve possible losses. So it's not a solicitation to invest or trade. Always do your own research. Okay, here's a year in review on gold. These are all the one-day candles. This is on TradingView. I just wanted a nice clean pattern here. But this is gold in 2024. You see we had a low of 1984 back on February 14th. This is the start of 2024 here. And we had a steady rise from February all the way through to, around this time, November time. You'll see that as a common theme on a lot of these. We had an all-time high on October 30th of 27.92. Bear in mind, all these figures that I'm calling out may not match exactly with yours because of the broker figures. This one broker I'm using here on TradingView is 8cap, but all the brokers that you use on your trading platforms or on TradingView, these numbers tend to be slightly different. So this is just accurate on my broker that I'm showing you right now. On gold, on the election result, which was November 6th, we actually had a drop down on gold right here. And this is Dow Jones. This is the US 30. We had a low way back here on January 7th of 37,121. Again, a slow trickle up. We did come down around here to almost that low again. But after that, again, a slow trickle up, pretty much higher highs over higher highs over higher highs. This is what we call the Trump bump. Which is the election results came out on November 6th in the USA. And we had this massive spike up on November 6th. A lot of them you'll see were a lot bigger than that. An all-time high back here on November 29th. And pretty much we stayed up there for a few days. And obviously we've crashed right the way back down here now. And we're looking to see where the market is headed now. If you threw a fib on this, you're probably going to be seeing what's going to happen on this, whether it's going to break that 50 and carry on up or whether it's going to come down. A lot of people are predicting we're going to have a 10% correction going into the new year. So, this is around 42. People are thinking we're going to be, could be way down here in this in this level. 42, even all the way back down here somewhere. So just trade what you see. Don't take too much notice about people, the talking heads on TV, but be aware that we have come off an all-time high and we're waiting to see. Throw your support and resistance on there, throw your fib on there, and it'll give you an idea what we're doing. This is a NAS, pretty much, follow very similarly, but not exactly. Again, the low was a little earlier on January 5th. And then we took off. We still were seeing higher highs up until here. And then we broke structure here, and it took us a while to get back again. We needed the Trump bump on November 6th here to give us a nice little boost to break the structure here. We did get a pullback almost to where we started before the election results, but then it took off to another all-time high up here of 22,142. And again, we've come off that, and we've had 3 red candles on the daily, and we're looking to see what we're going to be doing next on that one. US oil, completely different. There was no low earlier in the year. We had a high right up here in April 5th. Our low didn't come down here until well, this should say September 10th was back here. This was the election result. It wasn't a Trump bump, so I didn't put that. That's November 6th. Actually fell off a little bit after the election results, and we're pretty rangy in here on oil. Again, USD JPY. We did get quite low early on in the year, like the indices down here, and we just kept going up and up and up, higher highs, all the way to the all-time high on July 12th. So very early, and then it crashed really, and we got our low for the year right back here in the middle of September. It was even lower than the beginning of the year. So it was a massive bump on massive reversal on UJ. We did come up. We got a little Trump bump here. Again, November the 6th, it went up, but it couldn't sustain it. Came back much lower. But now we are inching up again towards these higher highs. So be careful on your Forex, which pairs you're trading. And obviously, you know, things like UJ, when we look at the economic calendar, we're not just looking at the US dollar, we're also looking at what's happening in Japan. Okay, Bitcoin, we know what's happened. The low here back at the beginning of the year was 38,000. Okay, so to give you an idea, if you bought $10,000 worth here on January 23rd and you managed to get out exactly at the high up here, that $10,000 would have turned into over $28,000 in 1 year, which is quite the return. So you do need to jump on Corinne's calls and get educated on crypto, and use Sniper. And I'll show you that in a minute. Use Sniper to trade these crypto coins. It's very, very important. And the next one I'll show you even better. This is XRP, which is Ripple. You can see, look along here all the way through the year, we had a low here of 40 cents. But still, you know, just rangy all the way down. You know, if anything, lower, slightly lower, lower highs over lower highs until the Trump bump here. And this is a dramatic Trump bump. So it didn't really happen straight away. But a few days later, we started getting these candles getting bigger and bigger and bigger. Bit of consolidation after a move always. Then more big candles, bit of consolidation always. And a massive run up all the way up to this all-time high of $2.89 and change. Now we've got a lot of wicks over here, so we're really in the indecision stage about where we're going. Obviously, Trump takes over on January 20th, so that's going to be another big movement, I think, on crypto in general, and we'll see how that plays out. Okay. So value of $10,000. If you invested it at the lowest price in 2024, gold, your $10,000 would have turned into 14,000 and change. Bitcoin, your $10,000 would have turned into 28,000 and change. But Ripple XRP, if you'd invested 10,000 at that 40-cent range, it would now, and you got out at the height, it would have been worth $72,000. So $10,000 to $72,000, that is reason alone to be on Corinne's calls on Jifu Live. Okay. So if you want all the replays, I do post the replays of everything in the chat, but I do have a YouTube channel, John Oliver John Oliver AZ. You can catch me there. My IG is John O Entrepreneur if you want to follow me on there. What I'm going to do is I'm going to bring up my fellow trader, my mentor, the boss trader, Jim Aguilera. He also has a YouTube channel. You can follow him there, Jim Aguilera 3929. I believe he's now committed to growing that YouTube channel, and he's been adding some great content on there. So make sure you follow him on there. And this is a great quote. It didn't actually come from Jim, but it could be. The year's end is neither an end nor a beginning, but a going on, meaning a continuation. So what that means is everything you've learned up to this point, all this wisdom, all this experience, all this training that you'll be doing, it doesn't just go away. You're just going to carry on building it. The new year is just a date in the calendar. Just carry on learning, carry on growing, carry on with your risk management, and you will be successful at trading. Believe me. Be disciplined, be patient, be consistent. Don't let the fear take you over. Okay, so let me get out of this and let me stop sharing my screen, and I'm going to pass this over to Jim. Let me make him co-host here. So he, where'd he go? There he is. He disappeared on me for a minute. There we go, Jimmy.
Thanks, John. Great insight on crypto. For those of you that are not involved in crypto, it's definitely something that you may want to also add to, what you're learning, especially since you have access to it here at Jifu. But, there's a lot of great opportunities right now in crypto since it's been down for the last couple of weeks. I'm going to switch over here, and we're going to look at some indices today. Okay, so what we're looking at right now is the NAS 100 on the 1 minute chart. And what I did what I would do before I come on here and start looking for opportunities to start trading is, just do some analysis ahead of time and, go up to a higher time frame. Okay, and see what I can notice. Okay, and so I've marked up some areas down here because this thing kind of was going down overnight. And what I would be interested to know is what are some areas where this could, pause at or reverse from, have a bounce from. And so what I've done here, we have a low here. So obviously that's an area. And then this area here actually coincides with a trade on our FX Global Market Ideas that one of our educators called out a couple weeks ago. And so this area hasn't been tapped yet. So I want to make sure and have that on there. And then I saw an area here a little bit clear on actually like the 1 hour, which I'll go to in a minute. And then I didn't mark anything up higher because it's very easy to see on the live chart higher, okay? But this is definitely an area to mark out here that we could mark out here just to keep an eye on. But as you see, I dropped down to the 1 hour, and over here we had a wick here, touch this area, and then we had this area, and then we had another wick here. And then lo and behold, we were getting a little bit of a bounce over here from that area, okay? And then if I go down to the 15, really don't have anything new to mark up other than this little bit of a high that came here. If we zoom in a little bit, we can see we came to it here with this wick, and then we wicked to it a couple times, and we've been down ever since. But what I mean about, being able to look left is when we look left if we get on the 1 minute chart and we look left, we can't see anything as far as the downward direction goes, right? So we need to go to that higher time frame in order to be able to see areas that we might be interested in. Okay, but if we start heading up here on the chart, we can see all the areas, right? I mean, we got hundreds of pips to go before we even get to here. Let's see, we got 450 pips to go to get to here. So for right now, anyway, unless something dramatic happens on this chart, we don't need to look any further than here, other than what we can already see on the chart, right? We see we have an area here. So as this price starts to climb, if it was to climb, we can identify these little bit of highs here, and then this area here. We can see that already. So for myself, I don't need to mark stuff like that up because I can see it as the chart is printing candles. Okay. Now we did have some nice moves in London session here, so we'll just kind of go over them. We were pretty flat here. You can tell by the Bollinger Bands how tight they are, and how price is weaving in and out there. All right. So up here, we did start to kind of expand. As you can see, the bands open up. So, this starts to pique my attention on whether, I'm looking for potentially to get into a buy now that price is expanding up. We do get, what we're looking for, what I'm looking for when I look for buys is for price to get oversold here below this blue line and then break back up. So we did get that here. Volume is still really low, but we'll zoom in. So we did get that down here, okay? And this actually, didn't pan out. It would have been a loss, right? Because it went up a couple pips and then eventually broke down. So, if you're following exactly this strategy, then this would potentially be a loss, right? And so then what are we doing? We're just kind of waiting to see what the chart wants to tell us. We don't get another one of those buy opportunities until here. But at this point now, these bands are pointing down. These secondary trend lines, we're still above the primary trend line, which means ideally we're looking for buys. But these secondary trend lines are crossed now. We're looking for blue above red. We're looking for, preferably some distance like we have here. And well, we don't have that here, right? They're actually crossing down. So we wouldn't be interested really in getting into a buy on this candle, because although we're above the primary trend line, we now have our secondary trend lines crossed. Our Bollinger Bands are kind of pointing downwards. So we could start to kind of switch our bias and our analysis into a downward bias. And what we'd be looking for is that if this were to cross the primary trend line, causing the primary trend line to go red, then, not only that cross, right, but then an additional confirmation, right? So for me, I like to see it to come to be overbought and then come out of being overbought and then potentially, take a sell. So if we did take a sell here on this red candle that came out of being overbought here, we do go a little bit into profit and then a little bit into drawdown. This is still low volume. So as you can see, even just to the top of that candle is only 5 pips. So I'd probably give me a little bit of breathing room. Okay. And then as you can see, obviously I can stretch this out as far as you want. It was a very good move, right? And then if we weren't around for that one, then a couple candles later gives it to us again, comes above here and then breaks down on this red candle, and another good trade. And then we get another potential entry here where we break above the overbought line, and that happens on this little red candle here. Okay. Um, I don't love this trade. It's okay if I get in on a small candle. It doesn't necessarily have to engulf the previous candle. Those types of entries where you do get an engulf, like you do here, where this candle in the direction that you're wanting to trade. So in this case, a bearish candle engulfs the previous candle. That's great. That's more ideal. This is not so ideal where you have such a big bullish candle and then just a little small bearish candle as your entry candle. But in this particular case, you know, it would have worked. Probably would have given myself a little bit bigger of a stop because volume is starting to pick up. Okay. But obviously we can see that that's still a winner. And then over here, we didn't quite get there, but what we did get is a much better candle indication where we engulf the, you know, 4 candles to the left with this one single candle. So even though we didn't get a full break here of the line, it would have gone up in on a live chart. It would have broke above here, but it didn't close above here, right? This wick here would have brought this line above here, but then when the wick closed down, it made this close below. So we didn't quite get that entry. But if you're testing, you know, other types of entries where this did break above for a second, and then you're going off of, you know, price action and candle patterns, this would have still been a good entry. And then obviously it goes a lot of pips. And then if you didn't get in on any of that, would have been hard to get in anywhere here. Would have been high risk without any real confirmed entries for myself. And then up here, you get a pullback, doesn't quite make it back to where I like to see it get to. And then we start to get kind of a reversal, okay? But we don't know that. We don't know this is a reversal. This could be a pullback for another great entry. So what we're looking for is for it to get above the red line here, get overbought, and then come break down. So potentially, you know, you might get into something like this. And, you know, ideally, I do like to use about a 20 to 25 pip stop. But a 25 pip stop on this entry doesn't really protect anything for me because I like to be behind a significant structure. So this is the nearest significant structure, or at the very least, the red EMA. Okay. And in this case, you know, 25 pip stop would have, you know, potentially survived in this situation. But I didn't love it because it doesn't really fall anywhere. All right, we are above this small pullback, but you know, we're not above here. We're not above here. So, you know, I'm not sure I would have loved this trade at all. But if you did use a 25, you would have survived it. And then eventually, you know, obviously it does run into profit. Probably you would have protected yourself if you did hang on to a trade like this. You would have had your stop into profit and then got taken out at some point on this pullback. But it gave us a few entries here. Okay, gave us another one here, and then another one here. Just with this entry model. Okay. And then eventually we do run into some profit there, and then we get another pullback, and then another entry potential on this candle. Okay. Now the bands are starting to tighten up. Okay. Here you see they're pointing down, and price is like in the blue for quite a long time, and then now it starts to bounce into the white, into the blue, into the white, touches the red. So I don't love this area, but you know, if you did take this trade and you held it, it does pan out. Over here, we get a cross up. If you were to zoom in real, you know, real tight here, you can tell it does cross up and hold the top there and then come back down on this candle. This is a much better signal because the bands here, not the bands, but the EMAs here are starting to get back to having a little separation. And then, of course, this is a bearish engulfing candle, engulfs about 3 or 4 candles to the left. And then 25 pip stop puts us above this move and puts us behind the EMAs. And then obviously this goes for 1 to 2. Then we're looking for another potential entry here. And then this would be our entry candle here. We're crossed down on this red bearish candle. 25 gets us behind this structure and also behind the EMA. Obviously, it goes down to a 1 to 2 again. And then we kind of had a similar situation here where we didn't quite get there, but we got very close. So this is a potential entry here. And we don't go a full 1 to 2, but it does go 34. So I would have probably, for myself, taken, at least 20 out of that. There wasn't really any structure to place your stop loss behind. And so sometimes you just want to make sure that you're placing your stop loss in an area where you're going to be happy with, the amount of pips that you get. And sometimes when you don't have structure to do that, you can go a couple candles back from the candle it's painting. So if you would, potentially have your stop loss, say, behind this candle as it's starting to come down, you don't really have any structure. You do have structure here, but this is out of profit, right? This is reducing your potential loss, but you entered here and you're still at a little bit of a loss here. That's an okay spot. And eventually it comes all the way back and would have taken that out if you didn't close sooner. But when you don't have a real pullback on a move like this, you do want to make sure and lock in some profit so that when it does do this, then you've protected something. You're walking away with something. You did have the potential, I guess, to let this come down all the way back up, and then once it started making these wicks here and price started to come down, you could have potentially put a stop here, and then it would have got hit on this candle here, and you would have gave up a little bit more pips than putting a stop behind this candle. But either way, it's a positive trade. Okay, did deliver some pips. And then we're looking for our setup again. Now over here, we get a potential cross down here. Now we actually, on this candle that's red barely, it's a doji candle, we don't get a cross down. We actually get the cross down on this blue candle. So I wouldn't enter immediately on that blue candle. But if you're waiting, you do get an engulfing candle here, which could have potentially been an entry and would have been, a loss. Okay, because you're entering at the bottom of here, and no matter where your stop is, shouldn't really be using a stop bigger than, I would use a 50 pip stop in this situation. I don't see a reason for it. The volatility doesn't call for it. If you're using some kind of stop like 25, you would have got taken out. And then at that point, we're in the red bands. This crosses up here. And so I'm waiting for, a reason to potentially take a counter, which I don't really see one, or I'm waiting for this to start to show me that it wants to go down again. Okay. By that time, we get to market open, which is right here. Okay. And then now we're looking for an entry, right? I don't like to really trade in the first 5-10 minutes of market open unless I really see something that I like. But if we're following that rule, we're going to let this play out for a little bit. Obviously, we see it starts to run down quite a bit during right after market open, and then we do get a pullback. Okay, so the pullback here on the overbought happens around 8 minutes after market open. Okay, and so on this red candle here, we do get an entry. All right, so we could potentially take a sell here, follows the rules, and then 25 puts us above the EMAs and above some structure. And then obviously this goes for a 1 to 2 fairly quickly in 3-4 minutes. And then if we didn't get into that trade, we're waiting for the setup again. So we get a break above here. And then with this big bearish candle, we get an entry. I like this entry a lot because it breaks through both EMAs with one candle. Okay. And then I'm probably volatility's high here, and we're trying to get above the structure. Probably just using a 30 to be safe. And then obviously when I use a 30, I do like to go for 1 to 2, even so that's 60. And obviously we go into some decent profit and then pull back, and then we go. So I'm moving my stop to this pullback after this breaks the bottom here. And then pretty much after that, I could probably move my stop to this wick, and then it goes. Okay. And then we'd be looking for another potential entry, which we got here. Okay. Once we get to here, you can start to see this kind of trend line forming. Okay. So you see it here, doesn't quite get there here, but you get another touch here that you can start to draw this out. Okay. And so when you get this pullback here, you're like, okay, I got a trend line there, it held. I got a big bearish engulfing that breaks through both EMAs. And so there's another potential entry. Okay. This time, 25 works, gets you behind the structure, actually behind the trend line. And then you're shooting for potentially a 1 to 2, or maybe just around to the bottom of here, which is almost a 1 to 2. And we don't quite get there. Okay. We do go 20 pips in profit. So I'm definitely protected at break even. So this potentially would be a break even for me. It did go 20, but there's no way for me to capture 20 the way I trade. I don't just close a trade as soon as I see 10 or 20 pips in profit unless there's a reason for that. And I don't see the reason here because this wick happens very quickly. And by the time that happens, you're probably getting take out at your break even. Okay. And then, well, we're looking for another potential entry here, right? So we're looking for this to come above and break down. But what happens to me is that I see this trend line. I see we've broken the trend line. I see we're above the trend line. And so I'm not loving the idea of getting into more sells here above the trend line. And then plus, we start to cross here. And then we do get this another potential entry here. But like I said, this candle would have been the candle that crosses down here. But we are crossed up here on our secondary trend lines. We are deep in the red, and we are above my trend line here. So there's no way I'm taking that. Doesn't follow the rules. Okay. It does actually go down and deliver quite a few pips, but those are not my pips to catch because it doesn't follow my rules. Okay. Now we do come all the way down to the bottom here without another reason to enter in my book. And so we now start breaking back above this trend line to me, kind of it kind of played its role already. Okay. It did hold here as a, support on the other side of the trend line, right? We broke it, pulled back, went up, and then kind of held a little bit here and broke. And then now it's kind of dead. So once I see that it's kind of served its purpose, I move on from it. Okay. So we did get a bottom here where we didn't quite touch here. And then we started to break up now. So, if you were so inclined to be looking for counter trend trades, we're still trying to follow the same rules here. Okay. We're waiting for price to get, oversold and come to overbought. So this candle here kind of does everything. It crosses up down here. It makes the EMAs cross. It crosses through both EMAs, but it is quite a large candle. So I wouldn't be super keen on taking something right after a 40 pip candle, especially on NAS. That's a pretty big move. But, there was a potential there for some pips. Okay. You'd have to use a really big stop to the bottom of the candle at least. And so, could have been a 1-to-1 for you if you did take that. I could be looking for other entries here for a counter. Now I'd be looking for the same setup, right? I'd be looking for these EMAs to stay crossed in a counter position. The reason this is counter is because we are below the primary trend line, which is calling for sells, but we are crossed up on the secondary trend lines, which indicate a short-term, buy potential. So if we do break down here, and then we do get a break up with the, the candle patterns here, then that is potentially a buy, right? Now, the higher probability setup could be for a sell. This would have to start to work its way down. These lines would have to cross, and then we would have to have that all happen with enough room that when we got to this area down here, and maybe even here, that we'd be at least have like 20 pips to get to these areas, because that would give us enough room to where if this got to here or here and started to reverse again, that we would have a place to take some pips, take some profit, or at least protect our trade. Okay, and I'm going to jump over to US 30 real quick. Now, we had a lot of the same similar situation on US 30 during London, right? We had a very flat area here, so I'm not going to go over all that, but I just will point out to you that, once we did break below the primary trend line and we were looking ideally for sells, we had an entry actually right there crossed down, but it's a tiny doji candle. This candle confirms the move down, so getting in at the bottom of this candle would have been a better confirmation for me. And obviously it kind of sputters around for a little bit and then gives you a big move, and then you had another entry here, you had the pullback, and then it crossed down here, would have been in a little bit of drawdown, okay, and then you had a big move down. Now this the red EMA here is the stronger, the EMA that I like to pay the most attention to, okay, because it's an area where if price holds that EMA, you're still kind of safe to stay in the trade or to be in a trade. Once it crosses above this EMA, I start to question whether I should be exiting the trade, right? And then the secondary line here, the blue one, it's a little faster, it tends to follow price really tightly. And so, depending on the type of move we have, it can be helpful. Obviously, this move here, it kind of held behind it. But, ideally, I like to follow or pay closer attention to what this red EMA is doing, okay? And sometimes when I take a trade and I break, for a sell, and I break below the red EMA, but I'm not quite below the blue EMA, I'm okay with that because I know that the red EMA is a longer length EMA that carries a bigger weight, and to be below it is more important than being below the blue EMA. Now, being below both for a sell is good, but just remember the red EMA carries a little more weight, right? So anyway, we do get an entry on this candle here, and then for a few minutes we're kind of at a profit, and then we go in for a big move, and then we don't get another great entry, until we get to here. Okay, so this is an example of how we are not below the blue EMA, but we are below the red. And so even though we're not crossing both, this is a potential entry here. And I probably use a 30 here and go for 60. And we go, quite a bit into profit, 40 before kind of reversing here. And so if you use a trailing stop loss as part of your trading plan and trading style and strategy, then you're probably out at some point behind here. Okay, probably right behind this area here, right behind here. Okay, but actually eventually does go. But before it goes, it gives you quite a few other entries. These lines don't ever actually cross here, but as you can tell here, these bands are super flat in this area here, And so, you know, it's hard to recognize that when you're in the market and you're looking for all these other things and you're new and you're trying to focus on, you know, whether this is breaking up and whether the lines are, you know, in the right alignment and everything. Sometimes you don't see this. Okay. But if you take a loss at some point, which there really wasn't one here, but if you take a loss, stop a minute and see if this is happening to you, right? This is oftentimes what causes us to have a loss that we don't recognize right away. Okay. Now we did get some of these entries that I'm talking about where we broke above here, but I'm starting to recognize what's going on here, right? And so what I'm looking for is I'm looking for price to break out. And so, you know, this could be a full reversal, or we could continue down in the same direction. Now, typically, when we get a big move and then we get a pause of consolidation, typically, more times than not, we will continue in the same direction. But don't use that information that I just gave you as an automatic, like, I'm always doing that without further analysis, right? You got to wait for the chart to actually tell you that and confirm that. So, you know, you could have taken any one of these break belows and you would have been okay. I would have waited for this to kind of move out of here, right? And so kind of we miss this if we're waiting, but it's just a little safer. And then we get an entry here on this candle, goes a little bit into profit, kind of comes back, and then eventually goes way more into profit. Hits your TP most likely here. But we get another entry on this candle. This one goes into profit a little quicker after a few minutes. Okay. And then we start to, you know, if we're looking for the entry again, this could have been a potential loss, right? Kind of follows the rules. We break above here, we break down, we're below all the EMAs, we're in the blue. Bands are still, you know, kind of expanded here. And so we get in here for a sell, immediately comes up, hits our lot, it hits our stop loss. Okay. Now we're still looking for the entry, right? But we start to get range here again. The lines cross up on this candle. So we don't know that this is in the wrong position until we get to this candle. So over here, we might still be looking at the chart for something. And so right here, this could be a potential entry. We kind of do cross. We're right on the line here. And so if you get in here, you go in for a few pips in profit. And let's see, how much was that? Yeah, it's 15 pips. And so, I mean, potentially you could have had a break even here. Or let's see if this would have hit a stop. I mean, you should really be using the structure up here, 35 pips. Wouldn't have hit, but you know, this could have gone several ways for you, right? You could have gotten break even. You could have you should have been using a stop somewhere up here, which would have never got hit. I would have, you know, if I have a stop up here and this comes all the way up here, then I'm definitely getting out, you know, when I get an opportunity down here. I'm not waiting. I don't know that this is going to come down and actually go in profit. And if I got an opportunity to reduce my loss, you know, from potentially, you know, 35 up here to 15 down here or something, I'm just going to get out with a small loss. So that's just me. So we get to cross up here, not interested in any of this, not interested. We cross back down here. And so now we're looking for our setup. At this point, we're too close to market open, which happens right here on this candle. So we kind of let this all go. And then we wait for an entry, right? So we get a lot of move down and we don't get anything till right here. Now, NAS 100 played a little bit nicer and cleaner on giving us an entry shortly after open. Now, this is an entry technically, and it goes into profit. But, you know, we got 1, 2, 3, and then on the candle, we would have potentially entered on either one of these two, would have been 4 or 5 wicks. This is not a good sign to see when you're trying to get into a trade in that direction of the wicks. right? Now, if you're new, you didn't see that, you didn't notice it, doesn't catch your attention, you got in on either one of these two, obviously we got profit. I just would have stayed out because of these wicks. So we're looking for another entry. We get one potentially here. We do get it on a really big candle, so I wouldn't have loved it. But I probably could have still got in using a smaller lot size. Yeah, I don't think I could have got into this. Um, anyway, I could have potentially used. I don't ever go more than 50 pips on a stop. It would have got me right to the EMA. Um, and obviously it would have gone for 1-to-1 at least. Okay. But I just too big of a candle for me to get into. Okay. So over here we have a couple more opportunities to get in. So right here on this candle, we break down, and it's not the strongest looking candle, but it does have a nice little wick on top, gives us an opportunity to, you know, kind of see that as a sign that it's got a lot of down pressure on it with the wick on top. It does also have a wick on bottom, which isn't ideal. But if you took it, definitely goes 1-to-2. And then we got an entry right after, probably on this candle here. We used this 30 pip stop and didn't quite get to a 1-to-2. Okay, so after it came down here, probably would have got taken out or somewhere around here. Okay, now what are we looking at now? Okay, I did have some areas marked up here. They did delete, but this was an area I had marked up already, and so I did get a bounce off of it. So I wouldn't be looking immediately to get into more cells after I had marked up this area based on a higher time frame, some information to the left that I saw. And so we did have this reversal here, similar to what we're getting on NAS. And a lot of times NAS and US30 do move similar, but definitely not always. And so what I'm looking for here is for these lines to cross back down and give me some space to this area to take a sell. Okay, right now we are currently, what do we got here? We got 215. If we started to cross down somewhere around here, I mean, we have plenty of pips. We have like 50 to go to the bottom here. If we did get some, these lines to cross and an entry confirmation and so forth. Okay. If this actually gave us a buy, a counter here, right? Because we're already crossed up. We rejected an area from a higher time frame down here. We got the break below, and then we got, nice wick down here. And then I would have got in after this candle here. This candle crossed, but it wasn't above any of the EMAs, and it had a wick on it, right? So it's okay that, that is your reason, or, that's your confirmation down here, but it's okay to wait an additional candle, okay? To see what that candle does, to see it gives you a better confirmation. So if you were going to take a counter, you could be in at the close of this candle or the start of that candle. Started out a little negative with the wick there, but ended up closing above. And then, we'd be targeting this area either as a TP or as a place that you're trailing your stop loss, very closely. Okay. So right now, the counter seems to be playing out, and it could give us continuing reasons to get in again. Obviously, if we get another break below and this structure continues to be bullish, right? So we had a low, and then we had a higher low, and then we had a higher low. Okay. So if we continue to come make higher lows and higher lows, you can continue to be bullish on this counter trend trade, right? So over here, we had a high, and then we had a lower high, and then we had a lower high, and then we had a lower high, and then we started to break that structure. We had a higher high, and then we had a higher high, and then we had a higher high. So if we break this and create another higher high somewhere up here, we are still continuing to show that this is still a reversal that's continuing to go up, giving us a little bit more confidence to be able to take counter trend trades. Once and if we do start to get close to this primary trend line, I would start to, wait for the chart to show me what it wants to do. Because, I mean, if you're already in a trade and you're locked into profit, then, okay, you can either take your profit here or you can at least trail it closely. But if you're not in trade by the time it gets to here, I'm definitely waiting. This is an area where you could see a big reversal back down with the trend, or we're waiting for price to break through, hopefully waiting for the EMAs to break through as well. So everything is above that line before we start looking for more buy entries out of that area. All right, that's it.
Excellent. Thank you very much, Jim. I appreciate that. That was great analysis. Hopefully, there was a lot of pips in there this morning. So hopefully a lot of you did take that. We're going to go into question and answer in a second. But just before that, I just want to show you this so that you can put this on your calendar. So don't forget, we were talking about crypto. Corinne, who's part of our bigger team, does great job, Crypto University. And she is coming up on these dates here. You log into your back office. Make sure when you're in your university back office, you set it at English USA at the top right and your time. And that will show you the time in your local time. So Corinne is on these dates. These are my first dates, so I'm going to be on Thursday, the 2nd at 8 a.m. That's Mountain Time. And then after that, my schedule will be Sunday, Tuesday, and Thursday. Sunday is going to be more about our mindset in trading. That's going to go over a lot of stuff that we were talking about, Brian, about, how do we apply ourselves? How do we stay disciplined? How do we actually practice what we preach? How do we put into practice what we know we're meant to be doing? And how our mindset plays a big part of that. And as you get more successful in trading, your account gets bigger, you're doing funded trading challenges or whatever, mindset is such an essential part. In fact, any type of trading that you do, mindset is almost as important as the indicators, scanners, and charts itself. And then Tuesday morning, 8 a.m. and Thursday morning, 8 a.m. I'll be going over live analysis. The first few of those are going to be basic because they're going to be recorded. And so they will go over the setups. What is the primary trend line? What is the secondary trend line? What do they mean? What do they look like? What happens when they're getting closer together? What happens when they're moving apart? What angle are those lines? You can become a successful trader just learning how to interpret the primary trend line and the two secondary EMA trend lines. If you just master those two, you're going to be successful at trading. But obviously, it's a layer upon layer process. And so these trainings are going to start adding layers upon layers to you. So you get a nice full rounded education on those. So I just wanted to show you that. Make sure you put it in your calendar. They are set up there so that you can jump in, and it will be training on Sniper. So I'm very excited. Hopefully you can jump on with me and support me, and obviously get some value of that as well. So hopefully I'll see a bunch of you there, and obviously jump on Corinne's calls as well, especially if you're obviously interested in crypto. She is the crypto queen, so make sure you get on there. Let's see if you have any questions. Let's see if we got anything. Yep, Shani, that's it. Repetition, repetition. Thank you very much, Shani. I'm excited to have you on that call as well. When I was in your position, Shani, beginning, I just wanted to learn as much as possible, and repetition really was the key to that. Because the more times I heard things, even in slightly different ways, the more it implanted itself in my brain and enabled me to to really practice that. And the other thing that really helped, guys, is get a notepad out, write these things down. When Jim is imparting his wisdom and I'm trying to add value here, a lot of the times you can write this down. The physical act of writing, of moving your hand, I'm not talking about on a computer. A lot of studies have shown that you learn more and deeper and better if you physically hold a pen and put pen to paper, because you're utilizing lots of different synapses in your brain of feel and movement and sight and even sound of the pen on the paper to create an experience, and that embeds that into your mind a lot better than it does on your phone or your laptop. I know a lot of people, especially you younger guys, love using your phones, but go to Walmart. These spiral notepads, they're, one like this. I have it, I've got pages and pages of notes, so you can't see it because it's all, but pages, even today, these are my notes from today and over the weekend. This cost $1 or 99 cents or something like that. So go and buy a bunch of them. You got a pen lying around somewhere, or go to the bank and steal one from there. No, not really. But anyway, physical, get that down. Any other questions before we go? Let me just make sure that I'm stopping the recording.